Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian, and some of you know me as Triangle Investor from Max. Today, I'm pleased to have Jeff Clark in my show. Jeff is a veteran in the space, metals and mining analyst, author of a great book called PAYDIRT, Mining for Profits with Gold, Silver Stocks, editor of goldadvisor.com, editor of KC Research a few years ago, and much more. Jeff, welcome to my show. It is really great to have you.
Oh, it's great to be here, Lucian. Thanks for so much for having me.
Thank you. I have mentioned that you were an editor at KC Research. Actually, I have been following your work from those days.
Oh,
You are a no name in the space, but you are for the first time in my show. And all my first timers have to tell me more about their background, their origin story. So, Jeff, 2 or 3 minute answer. Who are you? What's your background? What's your origin story?
sure. Some people may not know, but my dad was actually a gold prospector back in the day. He retired early, moved to California, and from the very first time he saw that shiny little gold nugget in the bottom of his pan, he was hooked. And he spent the next 2 decades probably exploring, all over. We had mining claims actually in Nevada, Arizona, California. And he worked with a group of people. He didn't work for a junior company. He worked on his own with a group of
Mhm.
people. They had some success. His biggest find was a um, Luciana. It was a like a 5.5 pound piece of quartz, beautiful white quartz, and weaving throughout it was about 3.5 ounces of gold. So it was beautiful.
Yeah.
They did find a gold vein in Arizona, and it was 14 grams per ton near surface. But, and this is a good lesson for mining investors, after you added in the cost of mechanized mining for a small project, it wasn't economic. And so even though it was high grade, it wasn't economic after you added in all the costs of actually capturing, that gold. So that's a good thing to keep in mind. So regardless of grade, you need to see economics in a project. But anyway, I got hired by KC Research. That's another story. Loved it there. Worked for multiple bullion dealers and newsletter writers and established the goldadvisor.com, going out pretty much on my own for the second time in 2022. Yeah. And then we started the PAYDIRT Prospector after we published the book. But that's the short version.
Yeah, that's a great story. Actually, I had Peter Krauth in my show a few days ago, and you two will work together, right?
Yeah, so we talk about M&A in the mining sector, right? Well, now we've had a little M&A in the junior newsletter writing sector. So maybe that'll kickstart something, Lucy. Let's see what happens. But yes, Gwen Preston of Resource Maven did decide to kind of go a different route. And long story short, I ended up buying her business. I made a separate deal with Peter Krauth of the Silver Stock Investor, and he came over as well. So everything is closed now. We've got a brand new website and got most of the cobwebs cleared out here, most of the bugs. So we're ready to rock and roll.
Excellent, excellent. Looking forward to see how will that go. Jeff, let's start with gold. My first question, where are we today in the terms of gold bull market, and where are we heading next?
That's a interesting question for now because gold has pulled back, as most people know. It did pop up at 2,400 again here, now pulling back. One thing to keep in mind is obviously the big picture, but I went back, Lucian, and documented every single correction in the last gold bull market, which was from 2001 to 2011. And in that decade-long bull market, there were 20 significant corrections, and they averaged, believe it or not, 12% on a pullback. If you take out the 2008 crash, they still averaged 10% on a pullback. We've had nothing like that. And so what is happening right now is actually normal, to be expected. And if you understand that as an investor, you can actually take advantage of it. When things run up really fast and strong, you might take profits on something. when things pull back and correct, that might be an opportunity to get in something you feel like you missed or to add shares to something you really like. So, using that natural volatility, even in the midst of a bull market, can really be to your advantage. And by the way, I went back and documented all the corrections in the mania. Remember in 1979, gold basically doubled and more by January. There were 6 corrections in the middle of the mania. In the middle of a parabolic rise, there were 6 corrections. So you have to get used to corrections if you want to invest in this sector. And of course, that's true in any sector, but it's also true with gold and it's also true with gold stocks.
Yeah, you got that right. I have a question. It's not often asked question. Is there actually a bear scenario for gold?
That's a good question. No, not right now. Not given the current financial system that is in place, a fiat system. Fiat equals faulty. It's a faulty currency system because they can dilute and dilute and dilute. And that's exactly what they've done. We're always talking about juniors diluting, well, uh, the US government and many governments around the world constantly dilute by just printing currency right out of thin air. And that's why our debt is so high. The deficit, we have a deficit, $1 trillion every year now, it seems like whatever the deficit is gets added to the debt. That's how it happens. And so if you can't pay your bills each year, well, just add it to the debt figure. And that's why we're at, so high on the debt levels. So until the monetary system is sound, until we have a group of honest politicians with integrity and a sound monetary system with freedoms in place for individual investors and just individuals in society, you must own gold and you must be overweight gold. And by overweight, I mean, and this sounds high to a lot of people, but I mean 20%. 20%, a fifth of your portfolio should be in gold. And that's documented throughout history. There was a long-term research study done that showed what's the optimal amount of gold to own in a portfolio to balance risk and reward. Going all the way back to the 60s, this study found that 20% is the optimal figure. So look at your portfolio. Do you have 20% in gold? If not, I think you have a higher risk than someone who does have 20%. And if you have less than 5%, that's not going to do anything for you.
Yeah, yeah. Jeff, are you equally bullish on the silver? I mean, which one will has better fundamentals, so to say?
Well, they do have different fundamentals. Supply and demand for silver starting to come into play. That is not really a case for gold. And gold does better in recessions. So if you think a recession is coming, gold usually rises in recessions. Silver usually falls during the specific period of a recession. But look at the COVID bounce in 2020. We had the big crash, right? The COVID crash. Then we had a bounce. The gold silver ratio got into the 120s at the end of March.
Yeah,
That was never before seen in history, but we had the bounce. And in that bounce between the low at March until September, gold rose 40%, but silver rose 140%. That kind of outperformance by silver is something that is going to happen again because history says so. And it's just a matter of being prepared for that because another spike in the silver price is coming.
yeah. Let's take 2 or 3 year time horizon. Will silver outperform gold in your opinion? And if yes, how much of better performance can we expect from silver compared to gold?
In all the silver and gold spikes and in all the silver precious metals bull markets, silver has outperformed gold every single time. So I have no reason to believe that that would be different. History clearly shows this. So to answer your question, over the next 2 to 3 years, yes, silver will outperform gold, and I do believe in that time frame we're going to see another run in precious metals, maybe two, but the next one will come. and gold will do well, silver will outperform because history says so.
Mm-hmm. Uh, we are hearing a lot of questions from gold and silver investors. I mean, the investors in equities. Why are gold and silver stocks still lagging compared with commodity performance?
Yeah, that's the question of the day for us gold stock investors, right? What's happening because gold's been rising. I think part of it is the fear trade. People are moving into gold out of fear, uncertainty, whatever, for multiple reasons. And so, if that's the reason they're moving into gold, that is not a reason someone would buy a gold stock, especially a junior. But I think this is going to turn, and I think what's going to happen is this month. Yeah, we're in August now. This month, you're starting to see producers report earnings for Q2. Q2 is significant because it's the first full quarter we've had gold at an elevated price, 2,300, 2,400. That's going to be the average. Whereas the average before that, 2 quarters before that wasn't even 2000, and 1 quarter before that was only like a 2000, 2100. So there's a significant increase in the gold price that goes right to the bottom line to earnings. And so not so much silver, but with the gold producers, we want to watch earnings. I'm going to be watching that, and I'm going to document that, because if all of a sudden they report a lot of green on the screen, um, that is going to entice the mainstream investor, Wall Street, Main Street, whatever, to enter this industry, especially if general equities are not doing well, especially if there's more uncertainty that drives the gold price higher, and all of a sudden investors see how profitable they are and how cheap the juniors are. That could entice some to come into our industry. So I think we could start to watch for that, and keep in mind that September is gold's best performing month of the year on average. So you combine those two things, and I think we could start to see, some money begin to trickle down. The point for me is that if we do in fact see that from the gold producers, uh, the fuse has been lit, and then it's just a matter of waiting until that the money comes down, and you will have only a limited window to make sure you have what you want when that kicks in.
Yeah, September. You mentioned September, and September is also a very good month for uranium equities. If we look at the history, I want to touch on uranium. What's your take on uranium? And actually, my question: how should investors play the uranium bull market?
Oh, I think you have to be long. We're in a uranium bull market despite the pullback here we've seen in the price. This is a long-term, very bullish trend. You have supply demand issues, you have geopolitical issues, you have green energy issues, you have the government and environmentalists for the most part supporting uranium because it is a zero emission fuel. I mean, I can't go one day without seeing a bullish comment on uranium, or a report that you would interpret as bullish. So
Yeah.
you have to be long. And just like the volatility we talked about in gold, we have the volatility in uranium as well. Again, big run-ups, take some profits, big pullbacks, add what you missed or you're looking to buy more of. So I think that's the position we're in right now. I am very long uranium. I have a lot of uranium names. Now, I did hold them for several years before this bull market kicked in. They just sat there and did nothing and went nowhere. But now I'm sitting on doubles and even more. And some of them I've even, taken profits because they ran up a lot. Um, but some on pullbacks I've bought more of. But the bottom line, to answer your question, is we're in a bull market. It's a temporary pullback. This market's going to go higher. And if you're a mining investor, a mining speculator, you want to be long this sector.
Yeah, you have a lot of uranium names in the portfolio. Can you share us some of them, or maybe which one are your favorites, or maybe which one are in your radar at the moment?
Sure. We have a lot in our paid letter, but I'll just tell you a couple that
Sure.
I'm very long. The two that I really like, I think you have to own, and you're going to own for the duration of the bull market, however long it ends up being. And those two are Encore Energy and Uranium Energy Corp. The leadership at both of these companies, their bios read like they're the dean of the uranium sector. They just have such incredible experience. They're leading the industry in terms of their experience, and they've been successful. So I really like both of those companies. Another reason I like them is you could consider them pre-producers, and we know from research that leading up to production, you tend to see a nice re-rating of that stock um, as production gets underway. Uh, Encore just started production at one plant. UEC is next. I would own both of those. I wouldn't just try to decide who's better or whatever. They're both extremely high quality companies. They're connected with the Department of Energy. I could go on and on, but those two you definitely want to own. If you
Yeah.
want to speculate a little bit, I'll give you one of those if I have time, Lucian.
Sure. Sure. Sure.
And that is, and again, this is a speculation, but it's Aero, AERO, Energy, projects in the Athabasca, run by a team, multiple people who've won awards for uranium discoveries before. They're drilling right now. Results are pending. This is a high speculation, but I invested in the private placement earlier this year because I really like their odds. So that's one I'm long as well. And there are others in our portfolio, but those are three that, the lower risk of UEC and Encore, and then the high speculative but high potential reward of Aero Energy.
Yeah, so you have a mix. You mentioned two names that are developers slash almost producers, and you have juniors. But can you tell me more about your portfolio allocation, not just in uranium, but in precious metals? What is the ratio between explorers, developers, producers, or maybe the ETFs?
Or maybe the what?
The ETFs.
Oh, yeah, no ETFs, no producers, a few developers, and then explorers. So the paid prospector, the paid letter is for the investor who wants to speculate a little bit more, who understands the risk you have when you're investing, 75% of that portfolio in explorers is going to be higher, but we're looking for the higher potential reward. And one thing to keep in mind is everything in both of my portfolios, the free and the paid, I own them all. In fact, I wouldn't have them there if
Yeah.
I either don't own them or wouldn't buy them and plan to buy them. So this is basically an over-the-shoulder look at my personal portfolio, and I, share what I'm doing. But as far as producers, I think we have two silver producers, and that's it.
Yeah.
No
Okay.
other uranium producers, no gold producers. Really, and I have a fair amount of developers, some pre-producers. There's a couple in the pay letter right now that you really want to buy. I just mentioned yesterday in PAYDIRT Prospector that it's not too late to buy this pre-producer that's leading up to production because those companies get a re-rate, but that re-rate, a lot of it occurs in the last 1, 2, 3 months. And that's exactly where we are with this company. So I think, it's a great way, it's a lower risk way to grab some profits in what is normally a high risk industry.
Yeah, exactly. And with exploration names, they're by nature more risky, of course. But how do you evaluate exploration or even development companies? What are the most important metrics, and what are some red flags that keep you away from investing in a junior or development company?
Well, I wrote a book to answer that very question.
Okay.
I did get a lot of requests for a book, and this was pre-COVID, and I was just too busy. And then COVID hit, and I kind of lost that excuse. So I did write the book, Pay Dirt, and it's very simply how to strike pay dirt with mining stocks, how to identify winners. And I did something else in there as well. I interviewed 16 other experts in the industry, and they all have their input into the book as well. I haven't seen many books do that, all the way from the Rick Rules of the world, all the way down to geologists you've never heard of, identifying what they look at to see if this is a stock that they would want to buy or not buy. And those guys are very clear about it. There's no wavering on their part at all. They're very specific and very clear about what they would do and what they would not do. They'll tell you straight out. So the book is valuable for that way. But as a starting point to answer your question, you got to go with the three legs of the stool: the people, the politics, and the projects. Those three P's. You want to start there. You must have not just good people or experienced people, someone with a good resume. You need to look and see if they have had success with their prior companies and what the stock did. Did they create shareholder value under their tenure? That's one thing you want to do. The other thing is they must have invested their own money into the company. If they've not, it's an automatic decline for me. I automatically turn it down. If they're not risking their capital, why should I? You know?
Exactly. Exactly.
So that's the thing with the people. I always start there. I look at the politics. It must be in a pro-mining jurisdiction because you cannot Elon Musk your deposit. You can't move from California to Texas. You can't move it.
Yeah.
So you must be in a stable jurisdiction with a long track record of supporting property rights and not raiding assets when they get to the production level and all of a sudden they're making money and the government and regulators stepped in and want more taxes and revenue from it. So you must be in a pro-mining jurisdiction. And in fact, when I hear about a drill result that I don't know the company, the first two things I'm going to ask is, well, where is it and who's behind it before I even look at the project. And then, of course, you do look at the project and you want to go after ones that have the potential to have what my grandma's chocolate chip cookies have, big and rich. That's what we want. So that's what you're looking for. And I go into lots of detail about that. But you want to try to go for things that are bigger, things that are a little bit higher grade. As I said before, even with higher grade, you need to make sure the economics of that are going to work out. And you do that by constantly asking when you get press releases, when you read them, okay, is this something that can someday be economic? That's the bottom line. That question should be in the forefront of your head every time you read a press release. And of course, we try to help with that as well.
Yeah, very good answer. We didn't touch on copper. I want to hear your opinion on copper, and do you have investments in copper as well? And is this my main question is actually, is the copper the best long-term play out there besides uranium, of course?
The great thing about that question, Lucian, is I don't need to answer it. I'm long copper. I'm a lot. I'm long uranium. I'm long gold and silver. So I'm long all of them. So I don't have to worry about, okay, which one's going to outperform.
Yeah,
But with that said, just like I said with uranium, I do think a mining speculator needs to have exposure to strong copper equities, strong copper juniors. Uh, Bull market is similar to uranium. We have a supply demand issue. The supply of copper is just no way going to meet demand here in the next few years. So
exactly.
this is a long-term thing. It's also mostly green energy, but it's about electrification, of the world, which many countries and politicians are behind. Uh, Building out the infrastructure, et cetera, et cetera. There's a lot of demand things coming up for copper that are going to require more metal. And so we have that going on as well. So I'm long copper equities, and I think it's a bull market that, like uranium, is going to last several years at least.
Yeah, Jeff, my final question is the commodity super cycle still happening or something change in the process?
Oh no, we haven't really even got started yet. I don't follow commodities in general that much, but of the metals I do follow that are commodities, yeah, we're still at the beginning. We've had a pullback here. We may get another pullback, by the way, if we do get a recession. It's common for commodities to pull back in recession because demand is lower. So I would expect that if we get a crash in the stock market, if something happens, somebody tries to shoot Trump again. I don't know.
Yeah,
If we get something crazy, um, we could see another pullback in commodities. But we're looking at almost any way you measure it, really, a lot of charts I've seen. It's hard to imagine that commodities, have topped or they haven't even really got going yet. So, based on all of the things we've talked about, I do think this is going to be a commodity super cycle, and commodity super cycles last, like a decade. So I
yeah.
think this will be a long-lasting and very rewarding bull market for us investors.
Agreed, Jeff. Thank you very much for coming to my show, and please tell my audience how can they reach out to you and your services.
It's pretty easy. It's called thegoldadvisor.com, and you'll see all our products and services there. You see our customer service. You can send a ticket. I do see all customer service queries. If we get a mania in gold and silver and uranium and copper, I don't know if I'll be able to keep up with the tickets personally, but right now I do. So there's a lot of free things on the site as well we offer. We also offer the Gold Advisor portfolio, which is as of this morning, we had a new pick this morning,
Which one
is
is
now
it?
22. Oh, sorry.
Which one is it?
It is, drum roll please, it was Vizsla Copper.
Oh,
This is a company that's really on the move. While things have been cheap, they were going around buying up assets. And they got them on the cheap. They just completed a raise. The CEO, get this, just invested $2 million of his own money into the stock. That's on top of what he had already owned. And they have drill results pending. Pro Mining BC, great selection of my opinion. I think they have staying power for the copper bull market. Very strong team. You can check it out on the website, and again, it's all free. You just have to sign up.
yeah, definitely. I really respect the companies that are behind Inventa, and Vizsla Silver is one of them.
Yes,
Vizsla Copper, Koza
yes.
Resources. I own them all, and I really respect the people behind Inventa. Jeff, thank you very much once again, and I hope we will catch up sometime soon again. Thank you very much.
Thanks for having me, Lucian, and this was great. We'll do it again.